Welcome, dear traders. You are watching a recap of the Asian session. This week, the speeches of the central banks' heads and the IMF meeting are in the limelight. At its annual 45th meeting, the IMF voiced concerns about the crisis in Ukraine. The fund believes it's fueling inflation and slowing economic expansion. To this end, it slashed its forecast for global economic growth by nearly a full percentage point. This is the reason why market players are so painstakingly digesting the results of the IMF meeting. There have been many hints about rate hikes, and let's discuss what happened in the Asian-Pacific region. The rollercoaster in the equity market on Thursday ended with a drop in all main stock indexes. The euphoria triggered by the upbeat earnings reports of US companies faded quickly during the day. What made investors get rid of risky assets? The answer is the Fed chair statements. For many months, the market reaction to the Fed's hints about the rate increases has been rather sharp. However, speculators need more details now. During his speech at the International Monetary Fund debate, Jerome Powell admitted that in May, the interest rate could be raised by 50 basis points at once. He notes that the economy is very strong and the labor market is extremely tight. Earlier this week, several regional Fed presidents, Mary Daly from San Francisco, Charles Evans from Chicago, and Rafael Bostic from Atlanta, also mentioned the possibility of a rate hike in the near future. Powell's hawkish comments spooked stock investors. As a result, all 11 sectors of the S&P 500 index sank on Thursday. US Treasuries, which are also sensitive to changes in interest rates, have once again reached multi-year highs. Even though Jerome Powell, as usual, was cautious and said that he did not endorse any particular market pricing, the US dollar index regained momentum. It climbed above 100.60 versus the main rivals yesterday. This level is quite close to a two-year high of 101. A rally in the bond market also facilitated a jump in the US currency. This was hardly surprising for anyone, as analysts predict a long-term bull run for the US dollar, so any fall is likely to be short-lived. After having gained 3% in April, the US dollar has now entered the consolidation phase. It's projected to trade above 100 even if a slight rollback occurs. The Fed's meeting is just around the corner. Expectations of a rate hike will continue to push the US dollar index higher. In the Asian session, it was trading with the upward momentum. It has already touched the level of 100.95, raising most of its early losses after dropping to a weekly low. It's moving within the daily range of 100.47 and 100.97. It appears that the Fed is now more hawkish than other central banks. The US dollar also benefits from its status as the main reserve currency, and the yen remains weak against the greenback. It's quite logical. Unlike the Fed, the Bank of Japan stubbornly maintains its ultra-loose monetary policy. It also closely watches the yen's downward movement and, more importantly, tries to push it lower. For this purpose, it purchases an unlimited quantity of 10-year government bonds, and this is why the US dollar enjoys demand as a safe haven asset. The yen, on the contrary, has completely lost this status. The widening interest rate gap is the main catalyst of the dollar-yen pair's growth. The 130 level remains the psychologically important one. Policymakers keep this level in focus. In this meantime, the pair slid down 0.35% to 127.93 from 128.38 at the end of the previous trading. In the Asian session, it was consolidating in the daily range of 127.71 and 128.69. At the moment of making material for this video, the pair approached 128.23. The AUD-USD pair also shed losses. The Reserve Bank of Australia has finally announced the date of its next meeting, which is May 3. However, analysts do not predict a change in the key rate as the federal election will take place on May 21. However, they are widely expecting the rate hike at the meeting scheduled for June 7. Some market strategists believe that the rate could be raised by 40 basis points. The Aussie is highly sensitive to dynamics in the commodity market. It's now moving up amid sanctions against Russia and soaring oil prices. In the Asian session, the AUD-USD pair kept dropping, fluctuating near the support level of 0.7309 and the resistance level of 0.7378. At the time of preparing material for this video, the pair slipped to 0.7310. And that's all for now. We hope this week has been quite productive for you. Perhaps you have made some profitable trades thanks to our video analysis. Have a wonderful weekend and see you soon.